The housing market has started out this year on fire. However, I'm starting to see some data that could indicate a slight slowdown coming in the near future. What is that data and how will it impact the housing market? That's what I'm talking about on today's episode. Hi, I'm Josh Alexander from the Brokerage and your host of Orange County Housing Market News, your one-stop shop for all things Orange County real estate. So on today's episode, we're going to go over some of the recent data that's starting to show that there might be a slowdown coming in the market. So let's go ahead and get into it. So two of the most well-known indicators that really tell us what the housing market might be doing in the months ahead are going to be what is the 10-year Treasury doing and what are purchase applications doing. So the 10-year Treasury is going to be very closely tied to what mortgage interest rates are going to be. And as you probably know by now, interest rates have been skyrocketing since the beginning of the year. Right now, they're hovering right around 3.9%. At the beginning of this year, they're at 3.3. In December, they're at 3.1. So we're almost at a full percent difference since the end of last year. So that's not a surprise. We know that's happening. So let's look at the other side, which is purchase application data. So purchase applications basically tell you how many new buyers are talking to lenders and getting pre-approved to go look for a home. It's a great indicator of what future demand might be, because obviously if there's a lot of purchase applications, there's going to be a lot of new buyers entering the market pretty soon looking for homes. If purchase applications are down, that tends to show that demand will start diminishing over the next couple weeks and months because not as many buyers are entering the market. And that's exactly what's been happening over the last 3 weeks. So for the last 3 weeks in a row, purchase applications have been going down. So that shows us that there's less buyers entering the market than at the beginning of the year. So at the beginning of the year, we saw a giant spike of buyers into the market because they had FOMO. Interest rates were going up, they didn't want to miss out. So you had a bunch of buyers that have been sitting on the fence jump into the market all at once to get those loans to be able to try to find a house. Now we're starting to get past that point as rates continue to rise and we're starting to see those numbers wane. And because of that, there's a good chance that over the next couple weeks and months, especially if this trend continues, we're going to start see demand go down. And at the same time, in a few weeks, we're about to start seeing the spring market really take off in Southern California, which is when more people start placing their homes on the market. Inventory tends to rise a little bit more. So when you have rising inventory, demand going down a little bit, interest rates continuing to climb, that's going to lead to an environment which is going to be finally a little bit less crazy than it has been over the last couple months. So what does this mean for buyers and sellers? Well, buyers, unfortunately, this doesn't mean we're going to see a dramatic overnight shift in the housing market where all of a sudden we're in a buyer's market. There's just too much demand and too little inventory to make up to really get us there anytime soon. Even though purchase applications are down, they're still higher than most of the 2010s. So by no means are we seeing a dramatic dip in purchase applications, but we are seeing it trend downwards, which again is a good indication that future demand is going to start diminishing compared to where it is today. Over the next couple weeks and months, if we see these trends continue, we'll start to see the housing market soften a little bit, where instead of having to compete with 10, 15 offers on every home, maybe you're only having to compete with 5 or 10 offers. It puts you in a much better position. And on top of that, typically you're going to start seeing more inventory to choose from as we head into March and the spring months. So buyers, don't give up yet. If you've been in the market for months and are getting discouraged, just know the chances of you getting into escrow will probably increase over the next month or two as we head into spring and summer. On the selling side, it really depends on what you're trying to do. If all you need to do is sell your house, you need to get your house on the market right now. Over the last 2 weeks, it's actually gotten even hotter in the housing market. The days on market in Orange County is down to 20 days right now, which is insanely hot. However, the data is starting to show that over the next couple weeks, we are going to have demand drop a little bit. And over the next couple weeks, as we start to enter the spring market, typically you're going to start seeing supply increase a little bit. And yes, because inventory is so low, it's going to take us a while to see any noticeable difference in the market. However, if these trends continue, if you wait much longer, you're going to lose out on probably the best opportunity to sell your house for the highest price that we're going to see this year. There is just so many buyers out there willing to do almost anything to get into a home right now. So if you just need to sell your house, now is a great time to get it on the market. Now, on the other side, if you're trying to sell your house and then buy a new one, there might be a slight advantage in waiting a few more weeks to see how this shapes out. If we continue to see a little bit of softening in the market, yes, it might hurt you on the selling side of things. However, that means you're going to have more options available to you when you actually go to sell your house, because there'll be more inventory in the market as we enter the spring market. So that is something to definitely consider. Now, can you sell your house right now and get that high price for it and still be able to find a new house? Definitely, and I've talked about that on multiple episodes about how you can structure the contract to be able to get into escrow, close escrow, and still have another 2 or 3 months to be able to find a replacement property before you have to move out of the current one you have. So if you're still thinking that 2 or 3 months is not enough time and not enough cushion for you to find a new home, there are companies out there like knock.com, for instance, that will allow you to take money out of your house if you have equity in it, go out, purchase a new house, then you basically have up to 6 months to go take all of your stuff from your old house, move it into your new house, settle in, and then get your original house on the market, sell it on your own time, so there's no stress involved. Yes, there is a fee for doing that, but if that fee is worth having no stress and knowing that you have a long time to find a new property, then that might be worth it for you. So something to look into. If you're finding this information useful and you want weekly tips and advice on how to navigate this crazy market, make sure you hit that like, subscribe, and that bell button below if you're watching this on YouTube. That way you're notified every single week when I release a new episode. So until next week, stay healthy, stay happy, and I'll see you on the next show. Bye.